Good morning, traders. This is Jefferson Fossey here with Walls Trading. Happy Tuesday. It is October 28th. It's a couple minutes here after 7:45 here in the morning. The grain market's just paused here for the overnight session. Let's take a look and see what the markets have done here yesterday, what they've done here overnight, and what they may do here today. Please keep in mind futures trading does involve substantial amounts of risk. Certainly not suitable for all investors, traders, or producers. Before I get into everything here this morning, I'd like to apologize. Yesterday's update didn't get posted to the Walsh blog. You can subscribe here and get the updates on YouTube. To be honest, we use old software. When I clicked the button, it just didn't go through here yesterday. It was still spinning and waiting for me to update it here today. So I apologize for that. But you can always like, share, subscribe here on YouTube, and you'll get the notifications every day when I go live. Starting off here, like I normally do with the live cattle, December contract dropped $6.75 yesterday, 227.17, closing below that 100-day moving average, something this market has not done here since, 2 days in early April, the 7th and the 8th of April. Earlier this year we did close below that average, subsequently went up to new highs, but this has a little bit more selling pressure behind it. Now, we did finish well off the lows of the D's contract, might give a little bit of support to the notion we get a turnaround Tuesday here today. Volume was high yesterday, 68,000 contracts, certainly higher than we've seen at all up until now. So high volume, big down day usually means further weakness ahead. When I flip to the February contract, one thing, big difference that you notice, or I notice anyway, between the December and the February contracts is these three gap lower openings here that we've had in the last 7 trading days. That is not bullish, and the February contracts finished well below that 100-day average, did not get much of a bounce here. That still looks heavy to me. Also had extremely high volume on the February, so expecting more weakness here on the fat cattle here at the moment. I think most of this is margin liquidation pressure. I don't, and probably some fund liquidation here as well. We were broken through that 50 and the 100-day average, and this applies to feeders here as well. I think there's just more selling pressure ahead here. We might get a little bit of a bounce here because it's turnaround Tuesday, but who knows. Feeders finished their expanded limit down 13.75 here yesterday in the January contract. Actually, pretty much every November feeder cattle contract except the nearby October, which is going off the board here at the end of the week. Everything finished limit down here. Same thing with we showed you here in the February fat cattle. 3 gaps lower here in the last 7 trading days. We are above the 100-day moving average. That is giving you some support here at 332.78 and change. Although I think we're likely to break through that here today would be my guess. There was a fairly large pool of unfilled orders in most of the feeder cattle contracts here yesterday at the end of the trading session, indicating to me anyway that we should see some more selling pressure ahead. Hogs were 40 lower yesterday in the December contract. 81.50 is where they closed. Big bearish engulfment here. And this is the lowest the market's closed here. I've got to go all the way back to the end of July. 200-day moving average is your next downside support target. That's at 80.61 or so here today. See how the market, if it reacts once it gets down there. Grain market's continuing to stay strong. Corn's up 2 3/4 here this morning, 431.5. It gained 5.5 here yesterday. Pretty strong move up. Did not finish on the highs. The high was 431 3/4, finished 428 3/4, but we're adding a little bit more to it here this morning. The high has been 432.5. This gap back here is 432 3/4, so there's one tick still there that they got to fill. Some folks might look at that and say, well, there's no price gap there anymore. Some folks might look at it and say, well, there's still one tick. So we're getting awfully close to it. Market looks very, very strong. Trading right now at the highest we've been here since that July 3rd gap that they left on the chart. Market looks strong. Expected to head up to 440, perhaps even try testing this upper trend line here at 450. Everybody's pretty optimistic that the Trade deal in China will be beneficial to everyone. Soybeans are up another 10 cents here this morning. They gapped open higher yesterday. Finished today up 24 and 3/4. This morning we're at 10.95 and a quarter, up another 10 and a quarter cents. 1 month highs here, or 1 year highs, excuse me, 1 year highs here in soybeans. We haven't been up here since the beginning of last October. So a year and a month on, give or take a little bit highs. Market looks very, very strong. Might be some resistance there here at $11. And there is that gap to be filled, but the market does seem very, very strong here at this moment. Very high volume here yesterday as well. Some 259,000 contracts traded. That usually means more strong price movements ahead. December soy meal's up $5.10 here this morning, breaking out over $300. We're at 303.30. Yesterday we were up $4.10, 298.20. Market looks very strong, trading at the highest level it's been here since the middle of June, and I would expect these markets to continue to go higher from here. We are due for a little bit of a pullback. Soy meal's been racing straight up here for the last couple of weeks, but got good momentum. Look for this market to continue to trade higher. December soybean oil's down 41 this morning. It's just kind of chopping and grinding along. It's got a mild uptrend to it. Certainly not seeing the bullish reaction that the soybeans and the soy meal are here at the moment. Chicago wheat's up 5 3/4, along with Kansas City wheat up 5 3/4 here this morning. Wheat market's trading at a little over 1 month highs here right now. We haven't been up here since September 17th. That previous high that we had got a breakout of, that's 535 3/4. Right now we're at 531 3/4. Market looks fairly strong. Expected to trend up to test into that 100-day average here at 538 3/4. Wheat market also gapped open here on Sunday night, Monday morning trade here as well. KC wheat's at 520, trading up above the 50-day average here 2 days in a row now. Also here at 1 month highs. Prices we've not seen since the middle of September. Market looks strong here. Might find some resistance at 529 or so, which is where you've got the 100-day, and they may kind of trend back here and test into that 50-day average. KC wheat also left a very small gap on the chart here as well. The only other new signal that I've got on my charts here today is in the 10-year notes. And they're actually down about a penny or a tick and a half here today, 113.11. Now beginning today, we get the Fed meeting. Tomorrow they should raise or lower rates here by a quarter point. A lot of times you'll get a buy the rumor and sell the fact type of trade. That appears to be what the 10-year notes are setting up to be. They have been rallying higher here since, well, the end of May. Market's had a nice little uptrend to it. Expecting a quarter point rate cut here tomorrow, and expecting one at the meeting, another quarter point lower here at the meeting in December. Other markets that are zooming around here today, stock indexes continuing to stay strong. The S&P setting new contract highs, jumping higher here on trade news on the Sunday night open, also leaving a gap here on the chart. Big strong up day here for it though. Yesterday gaining 81 at the end of the day, but this morning it's up about 7. NASDAQ futures were up about 40 this morning after gaining 454 here yesterday. Dow futures up another couple hundred here yesterday. They gained 316. All three of those averages did gap open here with this Sunday night trade. The Russell's kind of lagging a little bit. That's down a few ticks here, a few bucks here this morning, down 730. Staying kind of weak here at the moment, but it did rally up to new highs here with yesterday's trade. And before I let you go here real quick, we'll take a quick look at the metal markets. Gold's down about 94 bucks here. Continues to trend lower. Look for it to possibly hit support here at 38.51, which is where you've got that 50% Fibonacci retracement. Also have the 50-day moving average at 38.08. May offer our next level of support there. Silver's down just 36 or so here this morning. Got real close to that 50% retracement. That's at 45.27. Today's low 45.51. We are bouncing up off that here a little bit. Short-term averages of both gold and silver are on the sell side, bearish side right now. I don't think in the long run that these markets are turning bearish. I think they're just kind of retracing, and they're doing it rather violently because we're at really, really high prices, and you're seeing really, really large trading ranges here recently. Volume's been declining here in the December silver as well, while we've been selling off here a little bit. Appreciate you folks listening. Sorry this went a little bit long. I will talk to you